Should we buy or sell this stock? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So I have a megatrend theme called cordless electricity. So we do see that there is a pretty good move here for Sociedad Quimica y Minera. They are also in the lithium business, but they do other stuff as well. And 99% away from the 52-week low, but still, minus 27-ish% away from the highs. Here is, the company's website, corporate overview. So SQM is a global company that develops and produces diverse products for several industries essential for human progress, such as health, nutrition, renewable energy, and technology through innovation and technological development. So yeah, a pretty broad intro. So let's look at the charts. Weekly data points, and we do see that there is something a bit time cycle-ish about the stock, but the time cycles have differed in duration. But it's one of those buy low, sell high stocks. The thing is that when we look at previous rising phases, the purple 20-week moving average, it pretty much told us, to be bullish or not. Here as well, the 20-week moving average is a very big deal. And when we zoom in here, we are still, playing around with the 20-week moving average. And when we go to the daily data points, then we do see that there's another moving average that is highly relevant. And that moving average is the blue 100-day moving average. Very nice here for the bulls, but there is a but. It can be very favorable to the bears, if it becomes a short level. So we definitively want to continue to see this moving average offer support, because if we do slip below it, as we have seen here in the past, in 2021, 2022, it became a solid resistance level. And back here in, this is mid-ish 2021, it was a very solid, very shortable level. But so far, the bulls are coming in here after a very protracted pullback. So this is interesting from a more bullish perspective. Looking at these other indicators, MACD is still rather elevated. RSI pulled back a bit, the same thing with the PPOs. So we are seeing some cool down. Looking at the daily data points, then the cool down has been more substantial. So it is at a level that is interesting. I think I will give the bulls a 5 here on the technicals with the 100 daily moving average support as the entry signal. It is very interesting that we have had 2 days now where we have seen in practice buyers come in at that level. So as long as it holds, the bulls own the technicals. Looking at seasonality, to the right here, we do see that over the last 10 in red, 5 in green, and 7 years in blue, there usually is a bit more weakness into 6th, 7th-ish of July, but that is when the bullish seasonality comes with a vengeance, leading all the way up until the 23rd of August. Looking to the left, over the last 5 years, July closes higher 80% of the time, August a bit of a pullback, but then September 100% of the time it closes higher than it opened. Over the last 10 years, July, August, September, October are some of the strongest months for this stock. Looking at the last 20 years, so July is 55% bullish, August more bullish than bearish, but September is a very strong month. So I give the bulls 6 here on seasonality. This looks very interesting. July is a strong month. August is generally strong, but then September is very strong. So we are in the best seasonality for this stock. When we look at the fundamentals, SAX has a number one strong buy and a D value score, but A growth, A momentum. Industry rank is in the top 6%. They categorize the company as fertilizers. Going back here to the company website, they say that they hold a leading world position in lithium, potassium nitrate, iodine, and thermosolar salts. So they are a bit broader, frankly, than what we get the impression of here from SAX. But anyway, good scores. If we go here to insider activity, then we do see nothing. Okay, that's just the way it is sometimes. Market cap is 22 billion US dollars, and the yield, is it really almost 11%? So let's go to Finviz. 3.55%. Yeah, if we go here, so this is a market screener, and then we do get the yield of 7%, 7.21. But anyway, the yield is really good. Let's look at the consensus estimates. So there are 14 analysts covering the stock. Average 25% upside price target. Highest is 60% above. Lowest is 27% below. So there is a bit of a mix here. I give the bulls a 6 here on the fundamentals. Very interesting scores, nice yield, decent price targets, a lot of stuff here working in favor of the stock. Let's look at the correlations. So we do have 74% with the S&P 500, which represents America. 89% with the XME, which is the metals and mining ETF. Then we have minus 16% with the Chile ETF. Then 78% with the lithium and batteries ETF. Daily data points, minus 70% S&P 500, 59% with the XME, 76 here with Chile, and minus 53% here with lithium. Looking both long and short term, the strongest correlation we do get is with the XME. So what happens with the XME is very likely going to affect SQM. Yeah, so you can see here that this ETF, it has fallen. So let me draw something interesting in here. So you can see that this low is very, very interesting, and we are pretty darn close to it. So it is definitively a level where we do tend to see the buyers buy the XME. On top of that, we also have the blue 100-week moving average, which could help form a low. And the blue 100-week, as you can see, it was very important back here. So it basically is a moving average with a lot of legitimacy. So some very interesting things could happen here with the XME, which in turn would be very interesting and potentially bullish for SQM. So here is the relationship between XQM and XME. SQM has very substantially outperformed the XME, pushing us all the way up here into quite overbought RSI. So looking at the history between these two, it's a bit risky. So maybe we've kind of gone a bit too far in one direction. So let's look at the seasonality. So the coming seasonality usually sees SQM underperform the XME leading into mid-ish of July. But after that, we do tend to see some outperformance. So let's now look at the relationship between XME, the metals and mining ETF, as you can see, metals and mining ETF, with the S&P 500. And we are potentially forming, so there's a lot of patterns here, basically. So let me just draw it in. So here you have an inverse head and shoulders pattern that is, bullish. You also have something that one could argue is a bit cup and handle-ish. That is also a bullish technical pattern. So let's look at the seasonality. What does it project? Okay, so, over the last 10 years, pretty bearish here for the metals and mining. Over the last 7 years here in blue, a bit flattish. Green in, okay, so green here in 5. Then we usually see some outperformance here for the XME. So I give the bulls a 5 here on relative performance. So we end up with a 5.5 in favor of the bulls. The key entry signal stop loss is 100 daily moving average support. Given all of these data points, we definitively expect the 100 daily moving average to hold. So all in all, this looks very interesting. It certainly looks a lot more bullish than bearish. So let's look at some other stocks here because we have some time left. So here is Alcoa. It is pretty darn close to a very important moving average. So we are 3-ish% away from the blue 100-week moving average. And that moving average has been extremely buyable, as you can see in the past. Even here, a bit of a temporary bounce, but nonetheless, a gain is a gain. So that's definitively another, metal company to have on your radar. There is, iron, and there also is this thing called pumping iron. And Weight Watchers International, it's a fitness company, and you can see that we have fallen down to a potentially interesting level. This, zone around here, it has been bought in the past. We have seen that the stock has been way higher, not that far back. So maybe if the truth is somewhere in the middle, then there could be some nice gains. All the way up here, that was over 2,000%. And if we play a bit around here with the percentage tool, like just going up here, that would just be a bounce meeting resistance here from this low. That would be 100%. Failing to break out to a new high above this one would be a potential almost 400%. So, this looks speculatively interesting. The fact is that when we look decades into the past, there have been many times where this stock has seen very substantial pullbacks, but that have been followed by major rallies. So it has legitimacy as far as being a speculative bull stock. Here is X, weekly data points. This is United Steels Corporation. So if you look here at in the red 200-week moving average, very relevant here as a support level, extremely buyable, extremely shortable here as resistance. Buyable, buy. You see that this week we did close below it. It's not a disaster, but it's not ideal. So it's one of those could become interesting situations. But obviously, one would have to do a lot more research on United States Steel Corporation in order to decide to become bullish or bearish. But anyway, the 200-week moving average is obviously a very big deal. Going back here to metals, you can see that copper futures have fallen down to something that could form a double bottom. Boom and boom. It is a potential double bottom. Obviously, we don't know whether it becomes a double bottom or not, but it is a level where it could actually happen. So I would put this one on my double bottom watch list. Disney is looking rather interesting here. We can see that this level here, approximately, it has formed lows many times in the past. Put it this way, this level for many years has been easier to go long than short. Does it mean that it is impossible for Disney to go lower? Obviously not. It's just a risk-reward thing. So we have done an in-depth analysis of Sociedad Quimica y Minera, and we've also scanned through the charts to look for other opportunities. So that is what I always do. I first look at charts to get some interesting signals, and then of course I do full dive on the technicals, seasonality, fundamentals, and relative performance. So whatever you do, of course, you obviously want to use stops like the market wizards. and have a great week ahead.